flow from investing activity. Okay, so outflow is nothing but your cash payments. Okay, there won't be just inflow from the investing activity, there will also be the cash payments, right? So what are the cash payment? This relates to your inflow only. If you purchase the fixed asset, you will definitely sell it also, right? So first you need to make the cash payment to acquire the asset. It can be any, it can be intangible, it can be capitalized research and development. Next, we also do investment. We treated long term investment as your investing activity. So when you do any purchases, any cash payment to acquire shares, warrants, debt instrument of other enterprises, understand it's not your own organization, it is the other organization other than the instrument held for trading purpose. If a person who is in trading business of shares, debentures, so from him these payments are the operating activity and not the investing activity, right? Third is your cash advances. As I told you, you will give cash in form of loan, right? Advances to the third party. So if you make any kind of loans and advances to the third party, this will also be treated as cash outflow from the investing activity. But there are exceptions. What is the exception? Other than made by a financial enterprises. Like I told you in earlier slide also, for bank, giving the loan, right? Giving the loan to the third party is not the investing activity. For bank, it is what? It is their operating activity. Okay. So these are all the cash outflows from investing activity for a business. Then third and last one is your cash flow from the financing activity. Like investment when I did when my business was getting expanded. But is that enough for expansion? We require more capital in the business. For that purpose, we require finance. Finance in form of what? What you will do? You'll go and take the loan from bank, right? So that is nothing but your financing activity. Let's understand it in detail. So financing activity are your long-term funds. Okay, capital, right? Additional capital is required for expanding your business. Example you get is in form of issue of shares, debentures, raising long-term bank loan and repayment of bank loan. Okay, so if you will see, it is not just the loan which I will take. Bank will also give you loan for some amount only. There is a limit on which you will get a loan. Where you will go and get the capital from? Money can be raised by way of issue of shares. Now it's not just equity share. It can be from your equity share capital. It can be in form of preference share capital. Okay, debentures, right? And bank loan as told to you earlier. As per the accounting standard 3, financing activity is result of change in size, composition of the owner's capital, right? And it includes the preference share capital as well. So what will happen when you take a loan, when you issue the shares, it will result in changing in the size, okay, and the composition of owner's capital, because by issue of shares, specifically your equity shares, what happens, your share of business gets diluted. Okay, that part of the profit is for the person who holds the share. Okay, so this was cash from financing activity. We need to understand what are the cash outflows and what are the cash inflows from the financing activity. Let's check. Cash inflows. Cash inflows, nothing but the cash receipts from the financing activity. What will be the cash receipts from the financing activity? I told you taking the loans, right? Very simple one, but it's not enough. We need some more money. For that purpose, I will be issuing shares. It can be equity shares, it can be preference shares. Shares are of two kinds. One is equity share capital, other one is preference share capital. Then I can also issue debentures. Debentures are kind of loan capital of the company. It can be in the form of bond. It includes short term as well as the long term borrowings. Understand, when we were studying cash flow from the investing activity, that time what I said, short term investment are treated as a part of cash and cash equivalent. But in case of financing activity, if you have any kind of short term borrowings, what are the short term borrowings? If I give you an example, it's bank overdraft, right? I hope you know what is bank overdraft. When we take excess money from your current account, it is treated as a loan which bank gives to you in a form of short term borrowings. Okay, so if you take any kind of loan, let it be short term, let it be long term, all together are treated as your cash flow from financing activity. Now what will be the cash outflows? Outflows, as told, it is your cash payments. Okay, what are the cash payments? So if you repay the money to the bank, cash is going out of your business, right? So cash repayment is the amount which you are repaying on the borrowed fund. Okay, and it is not just the borrowings which you are required to pay, you also have to pay addition to that, called as interest. When you take loan from bank always charges you interest. Like when you invested money, you receive the interest. Okay, but when you have taken loan, what you are doing, we have to pay to the bank the interest. So interest are paid on loan, advances, as well as on debentures. And if you are issuing shares like your equity shares, preference shares, you have to pay something called dividend. Interest is paid on loans, dividends are paid on your equity and preference share. Now we will be understanding the summarized version of all the activities which we have studied till now. Let's check. First one we have studied was the operating activity. What was the operating activity? The activity which relates to your primary or main purpose of your business, and the example which I gave was the garment manufacturing company. Then we understood what are the cash inflows and what are the cash outflows from the business. Cash inflows were nothing but the sale of goods and providing of services. And in addition to that, other income, that is your receipts from royalties, fees, commission, and other revenue were treated as your cash inflows from your operating activity. What were the cash outflows? It was anything which is related to your employees, any kind of payment, salary, wages. Then purchase of inventory, the most important activity, buying the goods and providing the services. Third is operating expenses. What are your operating expenses? I told you. If you take any insurance, fire insurance, marine insurance, why you take them? The reason is for saving your business. Okay. Lastly, any taxes which you pay to the government, right? So it is important that you pay the taxes. For what to pay the taxes to the government. So any kind of taxes which you pay to the government in form of income tax will also be treated as your cash flow from operating activity. Second, we understood was investing activity. What were the investing activity? It is something which you have invested in fixed assets and long term. Understand, short term investment are not part of your investing activity, as they are part of your cash and cash equivalent. Okay, so we understood what are the cash inflows from the investing activity and what are the cash outflows. What are the inflows? When you sell the property, your land, building, land, equipment, and long term investment, right? And profit or in any income which you earn, like if I have invested in land, and if you give it on rental basis. Okay, if you give it on rental basis, the income which you earn on the land is nothing but cash inflow from the investing activity. Other than that, if you keep money in the bank, we earn interest. And if you invest in shares, we earn dividend. Okay, understand, it is interest dividend received and not the paid ones. Okay, what were the cash outflows? Anything. Purchase of asset, purchase of non-current investment. Non-current means long term. Okay, understand, current investment are part of your cash and cash equivalent. Lastly, we had activity called as financing activity. What were the financing? We take loan from the bank, right? For expanding, we need money. We take loan from the bank, and it's not enough, so we issue shares and also raise money in form of debentures. Okay, what were the cash inflows and what were the cash outflows from the financing activity? We understood that any kind of issuance of debts, bonds, shares were treated as your cash inflows from financing activity, and also the loan which we take from bank. Okay, and it doesn't make a difference whether it is short term or is it long term. What are the cash outflows? Outflow nothing but the cash payments. Any kind of redemption. Redemption means repayment. Okay, so any kind of repayment which you make for debentures, for taking loan, all are treated as your cash outflows from financing activity. And you have to pay something called interest on the loans and dividend on the shares, right? On shares we never pay interest, we always pay dividend. And shares can be equity shares and preference shares.